Z&S's educational webinar for the 26th of February, 2013. I'm gonna go through the major things that we normally look at, euro dollar and everything. We're gonna have a look at larger time frame charts. I've been looking at in the morning. Of course, maybe they may not be relevant in an hour and a half, but still, we should have the levels that I'll point out. Some of them are most of them are traded. Well, you'll see what I mean. Okay, what you're seeing in front of you is a 1 hour chart of Euro USD, and what I have drawn up over here is our Nixon series traditional short, which comes around the 130, the 132.66. Or actually, let me just have a look. I am also considering this anchor, to be honest. I'll give you a rationale later, but okay, let's go through what's highly technical right now. Okay, so I'm also considering the full halfway back because remember the larger long that we had from the 120 from the 126 drawn from here to there, the one that we broke. The fact that we saw participation from the 50, which was at the 1332 level approximately, I think it was this thing over here, 1315, if I'm not mistaken. The fact that we saw participation over there means that somebody was over there, so it was probably played into. So, okay, so euro dollar breaks this ambush long. Pretty much discounts my theory, but what the heck, let's talk about it. If we broke also what we had identified as the next in the series extension short, which was drawn from the bottom of our previous traditional, which we held yesterday, this thing over here. We broke this thing also. Right now, I don't see anything that we're holding over here. To be honest, I would like to see a run to the 131.675, the 137.69, if I'm not mistaken, 68. Okay, 68. If we have to be incredibly technical. I would like to see a run up to here at least. Or I don't know, your dollar can just probably just plunge from here. So a lot of scenarios that the euro dollar can can have. We can, I don't know, maybe Bernanke can start testifying. We can just crash down crash right down to the 128.760 level with the sell-offs that we saw yesterday. It's not it's not pretty much impossible, not at all. The scenarios we have is either, speaking in highly technical terms, is either we hold the 13167, this next in series traditional. If we break that, the only thing is resistance we have above us is the full halfway back short, which comes around at a 133.652. Which has a target exactly, not exactly, but a few pips off the larger 50%. And this level is going to be extremely difficult to defend. It's a huge level, but it's not, I don't think it's going to be first touch and touch and run, as the euro dollar used to do in back in the day. Okay. Any questions regarding the euro? To be honest, an observation, if we have to, just directly, pinpoint something that we're keeping. I don't like it at all, but doesn't in any way. I don't like it in any way, to be honest. Let me have a look at the 15-minute chart. But having in mind that our ambush long is gone, so might as well consider this trading. It's nothing over here. It's just, I don't know, maybe consider halfway back from here, but this is nothing. Yeah, this is, or maybe this thing halfway back from this level. To be honest, I don't know. This looks yeah, sort of okay. The 134.33 anchors. Well, let me have a look at what you're talking about. Yep, that's the too low. That's the thing we held yesterday. Shane, I don't know what you're talking about exactly. This is the short we held yesterday. And we were, expecting to have this, but as you see, we broke it. So on our hands, we either have this or a full halfway back. 134.30. Okay, Shane, can you amplify a bit what you mean? I'm not getting it. I'm a bit slow also today because woke up at 6:30 a.m. or something of the sort. No, Shane. The thing is that we have a staircase down market right now. We have a clear series of shorts. Let me just walk you through what we have. So this is the first, first traditional short we held off the top. Then we had the one with the front run. Just a second. No, actually, then we held the full halfway back. Okay. So yeah, after that we had the full halfway back. Traded to the front run of 12 to 15 pips, if I'm not mistaken. And from there, you had once, twice, this time, which this is basically our yesterday's short. When you have a series walking down like that, you would expect to have the next in the series trading. And if we break the series of longs, which we have, we will be looking for the all the way halfway back. Does it make sense? Okay. Okay, I'm gonna switch to TOS because I wanna talk about something that I've observed in the yen crosses this morning. After the massive thing we had yesterday, I just wanted to have a look at the things that are going on in the yen cross and how they look on larger time frame. What I see in terms of the halfway back strategy, of course, we're talking purely halfway back right now. It's a long stretch, but still, this is one of the levels you should consider. The anchor is 1142, approximately, to highs. It has a 50 at the 1954. It's not a first take for sure, especially with us. We're still in the small halfway back within the year JPY. Barely. But I'm gonna get into the micros also. I'm gonna explain the whole thing so you guys have an idea of what I'm talking about. So if this thing doesn't stick, like we have three things that might stick. So this is the most obvious extension you can have a look at. This is like you just eyeball it from you put on the daily graph and you're like, that is the extension. Other possibilities, things to consider in the JPYs, at least what I'm looking at. So down here, you see where is the first halfway back that we hold. So from this anchor, we drop this larger halfway back. It's the only the second one which goes to target. So your other option, this is what trade in Euro GBP. This is just the next daily, extension long. Let me get rid of the one that I told you. So this is another option we might have. This is another option we might have, and of course, what George is looking for is a full halfway back. Drawn, top, bottom to top, with a 50% at the 110. To be honest, I will be looking for this thing to hold. If this right now that we're holding doesn't hold, the 116 is a very good level for me, because remember the two distinct bottoms that I talk about all the time in the JPY crosses. They are at the 116 level. This is it. They are at the 116 level. So 50%. If we go below here, like this is a distinct bottom that we have. If we go below this, the only thing that is gonna able to hold us is the full halfway back for sure. Have it in mind. The way I get this is the first halfway back that we've held in the series, and after that, this is the larger retracement that we have, and it's over here. This is the first time we hold a 50% and go to target on the larger series over here, and from there you draw your next in the series, because this whole series of extensions right now is broken. So you draw your extension from the bottom of your last traditional that you've held to top. So possible levels that we might hold, as I told you, one scenario. Delete drawing. Just a second, guys. I'm a bit slow with TOS. You're gonna have to excuse me about that. So one thing is this, which we are trading right now. We're still defending the micro. I'm going to go into the micros and show you that if we have to be 100% technically correct, we've broken the extension short, which took us lower last night. So one is the 119.57, one option. The other is anchor 104.59. Next daily, within the halfway back system, the 1630, the 116.11, and the other one is the full halfway back, which comes at the 110.90 something. Okay, guys, if you have any questions with what I've just drawn, it's we haven't looked at larger time frames in the webinar because we haven't had such major developments. But when you have a 650 pip move for a day, you should have a look at your larger charts for sure and know what's going on over there. Guys, any questions? I'm going to quickly switch back to multi-charts. Here JPY. Just want to talk about what we have. Of course, this theory, everything relies on what the market is going to do. We just have to be prepared to know our levels and know what's going on. Okay, as you see, everything down the drain over here that we've drawn. Okay. Talking about the micros. So if we assume, let me zoom out first so I can have the level drawn up. if we assume that we're trading this thing, yeah, approximately. Okay. You know, your JPY likes to do these second test things once, twice. So I think we're still, you know, in this fight. Whoever took this entry should be riskless. You know, first touch. I have to be honest. First touch over here is riskless right now. So we'll see how it goes. If this thing gets defended, and of course the extension, which last night took us lower, was once. And the second time it traded, early morning, you know, if you have to be 100% technically correct, this thing is broken. It's not valid anymore. Of course, JPY is very volatile. We can consider, you know, 2-3 pips dipping in, but this is a bit more than 2-3 pips. So broken extension, supposed larger long setup, holding the first halfway back. I'm not saying go in and blindly buy, observe, watch. We just have to know all our scenarios. It's just that I've been looking at this all morning. I just want, you know, for you guys to I know, George. I know we are. I'm just saying. Wouldn't hurt us to know the opposing side, what they're doing. And basically, we're, you know, after this 650 pip, you know, plunge, it's only normally have a look at, you know, your larger time frame and everything. Yeah. If we have to be also, you know, continuing to be technically correct, which sometimes hurts, we're in for a retrade at least of the 122. You know, having in mind that we've broken the halfway back. Yeah, Stephen, also, very correct. I know you use the 65% line. So what Stephen is saying, that if we draw the same anchor new low extension and format my fib to have the 65% level over here. So that's 6.5, I presume. Yep. It's a perfect hold of the 65% level. I agree, Stephen. Didn't think of that one, to be honest. And I'm still gonna, you know, look for this if it happens. Depending on what happens on Bernanke. Of course, there's a lot of ifs over here. We have to break, okay, 65% level. On top of everything, we have to break the 122 level, yeah, in order to have, you know, confirmation of this this long, which is supposedly holding right now. I don't think that the yen just stopped at a random level, you know. It plunged. The unwinding in the end, it was 650 pips. Could have been 850 if it wanted to. I'm just considering, you know, that it stopped somewhere. I don't think it stopped in like thin air. And to be honest, below 116, I think the BOJ are going to have a problem of picking this thing up again. It might be profit taking for the BOJ also. We'll see. Okay, so this is what I've observed in the morning. To be honest, I'm not saying I'm lost. I'm just very cautious with what I do. because yesterday George called me up late last night, and he was in shock how the yen moved from the 122 level to the 120 to the 120 level. If you have a look, I think, or is it the last candle? I'm not sure. One of these two candles is identical to the 4-hour candle, which is doesn't matter. Continuing. I just wanted to. The problem with this theory I have for your JPY is that USD JPY is comfortably sitting right now within. It's far away, from the same extension. Let me just get rid of this. Sorry, guys. So the USD JPY is far away, from this level. This level for the USD JPY, pure analogy for USD JPY is at 89.34. So if we get rid of this level, what we're holding right now is this is the two distinct bottoms that I consider and I talk about all the time. It's 50%. I'm just grabbing for levels right now. Have in mind, I'm just making from points which I think are very relevant. I'm just drawing my fibs and trying to make something of what's going on. And if we go through all the JPY pairs, if we go through CAD JPY, for example, it is also a major support. This is for CAD JPY is like it's almost trading the last traditional, like the extension from the last traditional you have. Have in mind, I've just been, looking at all the pairs. If we go to GBP JPY, it's also trading the the level from it's the last traditional that it held over here. The anchor is 129.666 to top. 50% comes with the 138. I'm just just looking for levels. Trying to make something of what's going on, because the sell-off in the end was brutal. It was basically an unwinding of stop hunt, whatever you want to call it. It was everything in one. Let me just let me see if and Aussie JPY. Let me just get rid of the Metro tweet. Aussie JPY is also going to come in this anchor in a bit, so we'll see. It's just a theory. Just putting it out there and just saying could be something. Okay, pretty much gone through everything. We can have a detailed look at USD JPY, having in mind we trade it. Okay, let's have a look at USD JPY. Okay. So, of course, getting rid of all this. These are the two distinct bottoms I'm talking about. And for now, I'm seriously, grabbing for levels, but still. And from here, if I'm not mistaken, the series of shorts which we held is once, twice. I'm pretty sure it's this time. And over here on a 15-minute graph chart, actually, I don't see what we could possibly be holding. It could be this. Of course, it's never traded a full halfway back, which the user JPY likes doing. What should be said is, I think, is that if Bernanke bids up this market, it's going to be, this thing could be valid. If not, just put it in the good ideas book and that's it. Any questions, by the way, on the things I've been talking about? Of course, these levels could be just a very nice stop to the downside, just to give pullbacks. Have it in mind. Guys, no questions? You sure? Okay, so after talking about all the yen crosses, let's have a look at our GBP. And I am going to start out with a 4-hour chart, because we need to have a look at if this thing, I know it's just far-fetched right now, but if this thing rallies from this level, you need to know where our last line of defense is for the shorts. Have in mind the pound is trading within the multi-year support level. I'm not going to bring the TOS chart up. Most of the subscribers that are in here, they know what I'm talking about. Yeah, we are repeating the price action from 2010 within Euro USD. Except the fact, George, that we're trading in a staircase down market. We have traditionals instead of a crash to the downside, and then we hold an extension. Yep. Just saying, okay, let me have a look at my long-term pound chart, because I cannot pinpoint them on the 4-hour chart right now. Okay, GPUSD. Actually, let me see if I can. Yep, I can. Let me bring this thing up here. Okay, guys. The 156.293 level is the last, last anchor, proper anchor that we have, in the pound trading, because the aggressive downside was just incredible. So, the pound was just grabbing for halfway backs, going down the drain, pretty much nothing happening. So, if this thing is to, break away from what we're currently trading, the halfway back from the 153.217. It is our last line of defense is going to be the 153.495 approximately. So have it in mind. If this thing breaks, I'm not saying that this is going to happen. I'm just saying if it happens, the pound could, as easily as it went down, could go up. They're pushing it down. Of course, they need us, like weaker pound probably. Currency wars are on, as you know. They're just not saying it. So if they need the pound to go up, they're going to do it, and believe me, they can do it with a few words, which are going to be we are not going to consider any more additional QE, and this thing is going to break away like there's no tomorrow. Just saying, have it in mind. Currently trading halfway back. If we go to, okay, let me get rid of this thing, putting it back in the long-term charts. And if we go to a 15-minute time frame, the trend is your friend. Don't try to fight the trend. I'm not saying fight the trend over here, or in the JPY cross. I'm just looking. Pays to be informed. So this is how the pound looks like on a 15-minute time frame. And as you can see, it has kept the 61.8% line perfectly. However, since the second test of the halfway back, drawn from 131.99, we have kept the halfway back over here also. This is micro series talking. Okay, guys, any questions? Pound. Of course, we should mention that we're short over here and riskless and everything. So right now, no reason for you to consider the long side. I'm just saying that in moments when you have such markets as right now, it's very easy for a side to get crushed. You saw what happened to the long side yesterday. If Bernanke wants it, needs it, he's gonna crush the short side also. Okay, guys. Any questions regarding the pound? Pretty easy, pretty straightforward. Yeah, Marcin, I'm gonna have a look at. Let me just very quickly go to gold so we can get that out of the way, and we're gonna have a look at S&P 500. Okay, gold spot. Okay, gold right now, and we've talked about this, is sitting within its next daily short. Origination of this anchor is our 1754 to 1634, 35, approximately, halfway back short, which came into play twice. Next target, blew through targets, so this is it. Next daily short for gold is here and is trading right now. Very like Monday, if I'm not mistaken. Yep. Yesterday, this was the way it traded. Not riskless. If you were played it for such. Doesn't look very good on the short side, but doesn't look very good on the long side also. You have, and I haven't looked at the long side, I have to admit, because I'm with a short bias over here. So you have once, then you don't have that. Then it's this thing, next in the series, and at this point this is the same anchor new high. So keeping an eye on this. A break below the 1585 signals to us that supposedly this thing is coming into play, and the only thing we can observe, can make an observation of this thing breaking, is the 1578. Targets of gold are the 1535, which is a multi-year support level for gold since 2010, if I'm not mistaken. We talked about this in yesterday's webinar, if I'm not mistaken. Okay, gold pretty straightforward. Okay, let me have a look at S&P 500. Haven't looked at it in quite a while. Marcin, give me some time, please, so I can have an idea, just to see what's going on. Okay, so when you told me in the morning that you want me to have a look at the S&P 500, I had a look at it at home. The only thing I see right now, so this is this is the holiday halfway back that we held. And next daily long right now is trading. And S&P has a support level at the 1488.28. We also have participation from previous highs. As you can see, let me just get rid of the currently trading extension. Okay, so this is the extension from previous highs, to new highs. It had some participation, these two candles. Of course, it got slammed to the downside with yesterday's sell-off. So what we have on our hands in the S&P is traditional, goes to target, and after that, it's the next daily extension. And if we go on a smaller time frame, I'm not sure if it's not okay. So we have a bid in the euro, bid in the euro JPY also. But for now, it's just ranging. We'll see. If we go to a 15-minute time frame. Okay. What is currently trading? Let me have a look because I have it in multi-charts properly. TOS is a bit, I'm a bit lost in TOS still. Okay. Price differs because this is the SPX, and the other thing we were looking at was the the ES, which is the futures, and this is the spot market. So if I'm not mistaken, currently we're trading this extension short within S&P. We don't have a halfway back which to start the the plunge from. So it wouldn't be common for the S&P to go all the way halfway back. Also, 1506, 1497 is currently what it's trading. Bearish below the 1482. This level in ES is the 1478. The 1478. Marcin, satisfied? Does it give you a breather, or does it worry you? You're not worried? Good. Okay. Really depends. Really depends what Bernanke's gonna say. And he has 2 testimonies this week. Actually 3, but the third one is on Saturday. So he could drop the bomb if he has one on Saturday. So there's no market impact. We're just gonna have gaps. It's it's only Tuesday, but I wouldn't advise you guys going into leaving positions over the weekend with Bernanke having a say at things. Okay, guys. Any other questions? Anything else you would like me to have a look at? I've pretty much spilled out a lot of information. Is anything unclear? Is anything strange to you? Did you get what I'm saying? Do you understand the case that I'm making? And I'm not saying go long. I'm just saying cover the Euro Aussie trade. Okay, let me have a look. Oh, Euro Aussie. Well, George, I think entered was the 61.8% line of a traditional. I'm just waiting for this thing to backfill. Okay, so we had a decent reaction, and this line is the neckline, the head and shoulders, but out of the question now. So the next in the series, which defended perfectly, is the target right now, and the target perfectly aligns with the 61.8% line of a larger long drawn from 123, 130. Let me show it properly. 123.538 to highs. This thing still in here. So when this short is completed, you will have a look at the next in the series again. So 127.958 participation level. Still not there yet. Almost there. A bit of a too big of a front run still. We could actually we shouldn't consider trading because the Aussie likes trading in everything that has Aussie in it likes dipping into its 50%. It's the next in the series halfway back long. Okay, so me and George again are not on the same page. I thought that's go to daily. Okay, let's go to daily. George, why don't you cover it? That's what I see actually. Yeah, that's what I. Okay, we're gonna have over here 5-year daily chart and bring it up. So next in the series halfway back long. I know what you mean, George. Sorry, buddy. So George is saying this. Okay. So let me zoom in. This is what George is considering. Perfect touch of the 50%. Yep. My mistake, guys. So you have your first halfway back, second halfway back, 50% trading. Short, perfectly aligns with the 50% over here. Pretty much same thing. I'm just considering another anchor because I've seen it that way. Of course, I don't look at Euro Aussie a lot, so. Okay. So your next in the series traditional drawn from a 12141 to highs, 50% perfect touch. Okay. So just to sum up everything I've said, if we have to, if there's some validity to the things that I'm saying, and the euro will have to, the euro USD, just thinking in terms of the euro USD, we'll have to go to the full halfway back, which at this point is a bit far-fetched, to say the least. And have in mind that we have a perfect repetition of things going on here. So it's the same thing. We have this, when you have the short, you have an extension which breaks, the thing wedges, goes for an next in the series, drops. Again, breaks extension, makes a marginal new low, goes, trades next in the series. So same thing here. Have it in mind. Play is perfect, just to go short at a 131.685. Excessive volatility will be a fact today. So pretty much the same thing in play. You have this spike, which breaks our extension, which is this thing. Instead of just going like this, it could go. You never know with the Bernanke speaking. We may never trade this, but yeah. If we go to the upside, this is first point of resistance. So in order for this whole thing to work out, your USD has to go and trade the 133.657. So your JPY, all the other things can break their smaller shorts. It's gonna be, I don't know, probably it's gonna be crazy. I don't know. To be honest, these charts are gonna look a lot different in an hour or so. So have it in mind. Don't be too bold. All positions, just to be 100% technically correct, all positions which are in profit should be considered unrealized profits. And anything that you're not riskless in, not advisable to keep it. Of course, you could be lucky and the trend can go your way, not get stopped out. You're gonna see. Okay. Your JPY at this point is wedging. Actually, it's not wedging. It looks like a pennant. I don't know. Okay, guys. Any questions? Anything? Anything else you want to have a look at? Anything you're interested in? We should mention that the euro has been front-running large support levels. So if we go to a 4-hour time frame, very quickly to revise, because this week is just very important. We have to know all the options that we have over here. Just have a proper look at both sides over here. It would not be uncommon because the origination of the whole long is this thing over here, the 121.33.4. So if we keep the next in the series traditional, this directly takes us to a sort of a front run which the euro dollar likes keeping, the larger support levels. Have it in mind, the 129.244 could be also in play. Of course, analogy to 2010 is for us keeping the full halfway back. And if we don't keep it, we're going to have a problem in our hands with the euro. A lot of event risk also, during this week. USD, GDP. Okay, guys, any other questions? Anything else you're interested in? Anything? Or should I give you George? George, are you going to be able to speak, or? George? Okay, probably not there. Okay, I am going to conclude the webinar. Thank you for attending, guys.